Hello, I'm Debbie Bell-Hosking for Finextra TV here at Sibos 2023 in Toronto, and I'm joined by Kanika Hope of Temenos and Tyler Pichach of Microsoft. And we're chatting about all these new technologies that are driving the banking industry. So welcome to you both.
Thanks for having us.
Hi Debbie.
Lovely to have you. And I'm going to start with you first, if I may, Kanika. With the report that's being commissioned, the Economist report, commissioned by Temenos, you're talking about new technologies, in particular generative AI, that will be impacting banks over the next 5 years. So can you tell us a little bit more about that, please?
Sure. So as you said, we recently commissioned this report by the Economist Impact Unit, where they interviewed 300 bankers across retail, corporate and private banks to understand the impact of technologies on the banking industry over the next 5 years. And entirely expectedly, new technologies such as AI, such as blockchain, such as cloud, quantum computing came out as the top drivers of banking in the next 5 years, over and above customer expectations and regulation. And this is consistent in terms of the conclusion from 2019 onwards. We've been seeing this trend. When it comes to AI, 71% of our respondents said that AI will be the key differentiator between winners and losers. So it's seen as very key to the transformation of the industry. And when it comes to use cases in AI, there's a lot around personalizing the customer experience, which manifests itself very much in the form of chatbots and digital marketing and initiatives like that. But there is also a lot happening in fraud, in product development, risk and compliance. On the chatbot side, one example cited in the report is that of Bank of America, where they have a virtual assistant that they developed 5 years ago called Erica, and that has touched 37 million of their customers across 1.5 billion transactions. So it's really taken off. Danske Bank is another example of a bank that's using AI for fraud, where they've brought their false positives down by 60% in the last 5 years. So while AI and machine learning have been around for a number of years, it's the advent of ChatGPT this year that's really creating the waves, right? And banks are scurrying to find use cases to look at how that will help their operations and their employee productivity. And one of the examples again in our report is a bank called DBS in Singapore that is starting to use generative AI for its wealth business, to enable its relationship managers to really curate investment research and provide personalized investment strategies for their customers. Alpian is another example of a challenger bank doing just that.
And these are great examples, Kanika, and I'm going to come to you now, Tyler, to maybe embellish on that a little bit more from your point of view. Are you seeing customers increased interest in generative AI? And also, you were chatting about the banks, but how are you seeing banks use the power of generative AI?
Well, it's incredible, the amount of excitement around what generative AI can bring. When we go talk to banks, at first we thought, well, maybe they'll have a few use cases for us. On average, banks can come anywhere between 100 to 300 use cases. So the problem that banks are having is really narrowing that down and prioritizing to say, where do we start? The wealth use case is a fantastic use case because it really speaks to the power of generative AI being able to take a large data set and summarize that in seconds. Whereas a normal wealth advisor would have to do that work on their own and it could take them hours, they can now get to it in minutes. And when they can do it in minutes, it means they can do more reasoning over the data, going deeper into what it's saying so that when they do meet with their client, they can have a much better conversation and provide much better advice. So two things happen there from a business benefit perspective. One, it shrinks the time down for that wealth advisor to do their job. And two, it personalizes the experience in a much greater way, which of course, better advice, more sticky customers, all of those things are really golden. The other thing that is really exciting about generative AI, and people talk about this hype cycle idea with other technologies they've seen, really generative AI is not a hype cycle because we're already seeing those kinds of immediate benefits like the wealth one, even early days. One of the other use cases that banks are actively looking at, and one of our oldest generative AI ideas, not really old, but it's something called GitHub Copilot. And we've seen organizations that use this, it writes code on its own. It can write code 50% faster or do the work 50% of the time. And of course, from a business value perspective, that means that businesses can get better applications, better systems, move 50% faster than they are today. This is where business, of course, are saying, and you saw in the survey, why it is absolutely integral to their strategy to be able to drive AI in the right way, because it is transformational. And again, prioritizing the right use cases is key, but it is absolutely what is the move forward strategy for organizations.
And of course, customer needs are key as well. When we're talking about new technologies, are we not? So for you, Kanika, can I ask you what sort of new technologies and customer needs are you seeing that are disrupting the value chain, and are you seeing new business models emerging?
Sure, Debbie. So what we're seeing in this survey again is that the new technologies that we're talking about, the best way for banks to access them is through collaboration with fintechs and technology partners. So banks are seeing themselves as part of a wider digital ecosystem whereby they collaborate and corroborate with other entities. And one particular phenomenon that is manifesting itself in the industry is embedded finance, where 79% of the respondents in the survey talk about how this is going to become a very key trend. And we are seeing this already in the way banking products are being embedded into consumers' daily lives through the likes of Amazon, Shopify, etc., or into the the business value chains of businesses, right? So SME kind of QuickBooks and Intuit accounting software that is embedding banking products. And in our survey, 2 in 5 banks talked about providing banking as a service to these fintechs and other customer-facing brands and brands that embed the banking product. However, twice as many want to orchestrate their own digital ecosystems, and they want to control that customer relationship themselves. So banks very much want to do the latter, and 20% of them talk about super apps that help you to buy a house, etc.
And can you touch on the US market with that regard?
Sure. So the US market is a very peculiar market in terms of how vibrant it is in terms of the banking as a service as well as the embedded finance phenomena. So 25 billion of banking revenues are supposed to come from BaaS by 2026 in the US market, according to some reports, and 10% of total financial transactions. You're seeing 125 community banks, which are called sponsor banks in the US, that are planning to offer BaaS either now or in the future. And 125 initiatives going on at the moment. And these banks have seen better returns and better customer income, cost-income ratios than their peers. You can already see the benefits. And the particular reason why this is happening in the US is because of certain regulatory aspects in the market. It's extremely expensive, time-consuming and difficult to get a banking license for these fintechs in the US. So they rely on renting the license from license holders in order to embed that finance into their value proposition. And this enables the banks to also benefit very much because they are able to acquire customers more cheaply and expand their balance sheets more profitably through this banking as a service business model. And we are seeing that also in terms of the benefits they get from the Dodd-Frank Durbin amendment, which allows them to earn higher interchange fees on card processing, etc., which they can share with the brands and the fintechs. So this is the reason why it's taken off so much. One word of caution, risk and compliance is very, very important in this business model because you're catering to customers you don't own as a license holding bank. And there have been a few high profile cases of the regulator coming in and admonishing the banks. So they have to be very, very careful. And even the regulatory arbitrage is going to reduce over time because some of these newer products like digital wallets, etc., will come under the ambit of regulation.
And risk and compliance is something we are always hearing about
in banking.
And you say it as a word of caution in this regard.
Yes.
So let's go back to, in terms of the embedded finance, how is cloud enabling embedded finance?
Yeah, so embedded finance is a large thing to say, and so when we think about the Microsoft Cloud and where it plays across a few different areas. So the first one is providing the core infrastructure, modernized applications that actually can embed financial products into them, require modern architecture, require modern APIs, and cloud provides those. Microsoft provides those as first party. We have great partners that do that as well. The second piece, now it's more on the partner side, and you mentioned this earlier, that although there are lots of organizations that want to build their own embedded finance pieces into certain business applications or consumer applications, it does take a pretty heavy lift. And so the other thing cloud enables is to have great partners like Temenos that can build those applications to be able to help their end customers build into other applications they may be using. And then the third thing that cloud provides is channels, distribution. You mentioned some business applications. One of those applications, for example, is Microsoft Dynamics as an ERP, and solving business problems of an accounting firm that wants to do things within the application that they're already working and not have to go outside to do banking pieces is a big challenge today. And so embedded finance helps solve some of those pieces. And so we are distribution through our business applications, both on the consumer side, like Microsoft Teams and our Windows Edge, as well as business applications like Dynamics ERPs to be able to achieve that. So those are the three areas that I think cloud really helps enable infrastructure, partners, and distribution.
Excellent.
Wow, there is so much to absorb in this conversation. I wish we did have more time. And I must say, it really has been interesting to hear the different aspects. And new technologies, well, the word is new, isn't it? It's here to stay, it's here to watch. We're definitely watching this space. And thank you so much to both of you for your insight. Thank you.
Thank
Thank you.